A monumental deal between Nvidia and OpenAI has shaken up the markets, sending ripples across the chip sector and lifting tech stocks globally. Announced September 22nd to 23rd, 2025, the agreement involves Nvidia investing up to $100 billion in OpenAI, combined with a plan to build a massive AI infrastructure backbone centered on data centers using Nvidia hardware. Here's a breakdown of the key elements, what it means for the industry, and the possible risks. What the deal entails. Scope and investment. Nvidia will allocate up to $100 billion into its partnership with OpenAI. 10 gigawatts of AI infrastructure. OpenAI plans to deploy at least 10 gigawatts of Nvidia-powered systems. The first 1 gigawatt is expected to go live in the second half of 2026, using Nvidia's next-generation Vera Rubin platform. Equity and product flow. As part of the agreement, Nvidia will receive non-voting equity in OpenAI once the terms are finalized. In return, OpenAI will use some of the invested funds to purchase Nvidia's chips and systems. Market reaction. Stock gains. Nvidia's shares jumped nearly 4%. Some reports say up to 5%, reaching record or near-record highs following the announcement. Wider sector boost. The deal lifted related chip makers and data center infrastructure firms. For example, companies like Micron, Oracle, and partners involved in AI infrastructure also saw upward moves. Indexes climb. Major stock indexes such as the S&P 500 and Nasdaq benefited, with tech stocks helping to pull them higher. Why it's significant? Reinforces Nvidia's dominance. Nvidia cements its position not just as a supplier of chips, but as a strategic partner in AI infrastructure. This could widen the lead over rivals. Scale of AI infrastructure needed. The scale, 10 gigawatts, underscores just how computationally intensive the next generation of AI, large language models, generative AI, etc., is becoming. Building out this level of infrastructure requires massive investment, both in hardware and in electricity data center capacity. Revenues and addressable market. According to analysts, the deal gives Nvidia greater visibility into multi-year demand. It may generate hundreds of billions in chip sales over time. Some projections suggest Nvidia's data center revenue opportunity could reach $1 trillion by 2030. Risks and concerns. Antitrust and regulatory scrutiny. Given Nvidia's dominant position in GPU chips and OpenAI's influence in software and AI models, there are concerns this partnership could give the two an unfair advantage. Regulators may worry about preferential chip pricing, capacity allocation, or closing off opportunities for competitors. Circular investment critiques. One concern is that much of the investment might flow back into Nvidia itself, because OpenAI will be buying Nvidia chips with Nvidia's money, in part. This circular dynamic can lead to questions about how much of the deal really expands capacity versus just shifts ownership resales. Execution challenges. Deploying 10 gigawatts of AI infrastructure is non-trivial. Issues include sourcing chip production, energy, data center space, cooling, and building out supply chains. Also, scaling software and model deployment to match the hardware availability will require additional investment and innovation. Implications beyond Nvidia and OpenAI. Competitors' positioning. Companies like AMD, Broadcom, and others that supply chips or custom AI hardware may find themselves under pressure. Some may shift strategies toward custom chips or specialized hardware to avoid direct competition with Nvidia. Energy and infrastructure needs. Massive energy demand, data centers, and power infrastructure become central issues. Locations with favorable electricity, cooling, and regulatory environments will become more attractive. Global AI ecosystem. The deal illustrates how AI is fueling huge capital flows and how infrastructure, hardware, data centers, networks, is increasingly the foundation upon which AI models and services will be built. What to watch going forward? Number 1. Regulatory developments. Will U.S. antitrust authorities or other regulatory bodies intervene or set conditions for this kind of close hardware-software partnership? Number 2. Competitive responses. How will rivals respond? Through custom chip development, forming their own infrastructure alliances, or scaling differently? Number 3. Performance and deployment milestones. When does deployment begin? How effectively can the infrastructure be managed and utilized? Delays or inefficiencies could undermine the projections. Number 4. Financial returns. Will the deal translate into proportional revenue growth for Nvidia and acceptable margins? Are there cost overruns or unexpected expenditures that eat into profits? The Nvidia OpenAI deal is a landmark moment in the AI semiconductor space. Its size, ambition, and implications make it one of the most important tech stories of 2025. While the upside is substantial, reinforcing Nvidia's leadership, accelerating AI infrastructure, driving stock gains, the risks are non-trivial, especially around competition and execution. For investors, the deal suggests big opportunities in companies tied to AI infrastructure, chips, data centers, power, cooling. For regulators, it's a test case of how to balance fostering innovation with maintaining fair competition. That's your TechTide news update for today. And don't forget to like, share, and subscribe for the latest in tech.